All right, welcome to today's recap. This is Christian from Tribeca Trade Group, and it is Tuesday, the day after Christmas. As you would expect, very light volumes across the board, both in options and in ETFs. Just to give you an example or just a sense of what the volume actually was, SPY volume, you could see 39 million shares traded today. Normally trades about 80 million. So about 40% less than normal volume today in the SPY ETF. And the XLF normally trades about 67 million shares. That's the 30-day volume, and it traded about 31. So that's 50% of volume. So no joke, it was quiet today. And same thing in option activity. I'll show you the best signals of the day, but just kind of give you a sense. You can see there was some things with volume today, which we're going to go over. But look at the volume in GDX and GDXJ. So kind of unusual to see that go on. Looking at the S&P chart, we've kind of just been stuck here for the last week. I think we had this one nice green candle in the beginning of last week, and then it's kind of just been a digestion. And we're still above all the short-term moving averages, so you can't really say it's a sell signal. Yet we are seeing a little bit of an MACD bearish crossover here. But it kind of seems like we're grinding to a halt. So, personally, my opinion would be rather than have 5 days of chop in a row in the S&P, I would rather have us just come in like 1% and then have a little bit more of a trading range. But you can't always get what you want for, except on Christmas maybe. But yeah, that's just kind of how it's been. It's just been in such a very tight range. You can see another doji after Friday's doji as well. So just not a lot of movement. Where has been some movement is within sectors. So let me go through those. But it's always good to just to look at the S&P 500 just to see what's going on. The Nasdaq did underperform today. Was down. Looks like it came back a little bit more than I thought it did. But the Qs were down about. At one point about 75, 80 basis points. Yeah, they came back, finished about 20 basis points off that. Still above the 20-day moving average, but a little bit further damage than what we're seeing with the S&P. And the story of the day was Apple. They seem to come out with this story every so often about either less demand in the iPhone, or this. We obviously got this story out a couple times, which was complete bogus when they were in production for the iPhone, hearing that there wasn't that much demand, or when the orders started coming out. So who knows with these reports? Until Apple actually says it in their earnings, I think you kind of just have to say who knows about that data. And every time it seems like it's been a buying opportunity. So just purely from a technical standpoint, the area that I mentioned this morning, which was this green line here in Apple, held, as well as the 50-day moving average. So we really didn't get much price action at all today. You could see just a very thin looking body to this candle. We closed right around where we opened. The semiconductors, they were under pressure most of the day. Most of them did not come back, especially anything related to the iPhone. Anybody who makes anything onto the iPhone. The bottom line with this is, and I said this in the trading room, there's just right now, the semiconductors were a great trade for most of 2017, but it looks like they've broken down. They failed at the 50-day moving average again as a group. Not to say there's not standout performers, which Nvidia was a standout performer today, but I think for now, set an alert around the 50-day moving average. If this group happens to catch momentum again, which it may, then you can go ahead and we'll see if it reclaims the 50-day moving average, or basically setting an alert there and just saying, hey, we'll see what happens. Because I really don't think I really want to mess with this now that it's below the 50-day moving average. I don't have the 100-day moving average drawn here, but we're kind of sitting right around there. But still, it's lost the upside momentum, and that's all that I really care about. So you could analyze this on a case-by-case situation, but the group is just not there right now, which is fine. I always start with these videos with the worst, and then we'll talk about the good. Nvidia was more of a standout, up 1.1%. There was a weekly call buyer. Still, though, it still looks a little bit So good progress, but still looks choppy until it really gets back above the 50. And we've seen a couple of these names kind of get trapped below that 50-day moving average and not be able to do that. All right, so that's just the one group. And I know traders, the reason why I'm focusing on or spending a couple minutes on this, because especially retail traders, they seem to have a memory of these names, and maybe you get to know a group of names very well, and you don't want to abandon them right away. But I think really that's kind of what you have to do in this game is go where the momentum is. So where is the momentum right now? It's in a couple different spots. It's in crude. So I mean, crude had not made this gotten to this level since I believe it was May of 2015, I believe it was. So in any event, in a long time. So this is a great looking candle in crude. I mean, there's a lot of stuff going on. A lot of names are breaking higher in energy. XLE strong. We've talked about all these groups. The OIH is now, you could see this white line is now above the 200-day moving average. So you got a nice setup in something that's been basing for a while. So and new 50 new MACD crossovers as well. XOP, same thing. Oil and gas just recently had a bullish MACD crossover. And then if you look at the material space or the metals and mining space, very strong looking. I mean, this thing we saw call buying last week in the metals and XME. Very rare again. Whatever. This is the what you want to get used to is or sorry, what you want to look for when you see ETF options is something being swept when they pay above the ask, so aggressive. So they bought XME options a couple times last week aggressively, and again, this is the metal and mining ETF. This has both. It's got steel names in it, mining names, and then it has gold miners in it as well. Speaking of those names, lo and behold, they are back above the 200-day moving average. GDX, which had a real nice day today on the back of gold, moving up. I'm personally not, you could obviously try to go long gold on the break of the 200-day moving average, but it's a lot of chop to me. This is not a clean looking chart. So for the time being, I would probably watch. If we start to see, individual call buying, individual calls go up in some of these names, as GDXJ is now back above the 200-day moving average. So you can't really discount that. It is what it is. It's a break back above. It's just a very choppy looking chart to me. But interesting that that's happening. Also, the bonds came back pretty strong today. Kind of trying to get back above, reclaim some of that sell-off from last week. So they did not finish on the highs, but still up about 35 basis points. I think TLT was actually a little bit better. Nope, up about 30 basis points. So we'll see. We'll see if this gap can be. It looks like the gap kind of got filled, but still in the gap. So that's that. Couple other areas that were strong. XRT retail. Let's just take a look at the chart. This is continued to go here. You had an area where there's a little bit of digestion. Maybe this VPOC is as far as we go. We'll see what happens with just different. So just different areas showing some strength. I could show you a couple other charts. Besides the XME ETF, there is this rare earths ETF, very strong. Made a 52. This is rare earths REMX. Looks like it's trying to make a 52-week high. And a couple of other areas are strong as well. So what did we see in terms of option activity today? It was quiet. So I know it's funny because there's people on Twitter who try to make out more of these trades. I guess I get it. People want to make a trade. There was some Twitter calls that were purchased for the week. I mean, we're talking about like a 15,000 option premium. So yeah, I mean, they bought weekly calls aggressively in Twitter, but not something I would chase. I'm not going to chase a $15,000 order in option premium. So you need something a little bit bigger than that. A couple of the energy plays pretty strong. Again, I didn't really do too much trading. I sold a put spread in Apple versus that support, but APC very strong. Rig is another name that we saw a whole bunch of call buying a few months ago. And it kind of went quiet in terms of flow, as well as the chart too. Just kind of has been moving down, but we saw a little call buyer in this one. I think it would have to be something a little bit bigger for me to get involved. A couple other names, Mosaic. This was a name that we detailed last week. I think the besides the metals and mining space, this Moo ETF looks pretty interesting to me. Made a 52-week high today, and just crossing over on the MACD indicator. So this is names like CF, Tyson, Mosaic, Monsanto, names like that. So we saw a small call buyer in Mosaic. It was a little bit too small for me to get. Again, most of today's trades were pretty small. I know they were talking about a lot of people talking about Pepsi today. Yes, they bought aggressive. I'm sorry to be Debbie Downer today. I really am. But it's these were not good signals in my opinion. Unless you think Pepsi's going to go up to 135. If you're that much of a bull, here's what they did in Pepsi today. So no doubt about it, they went up aggressively. But look at the strike. I mean, these are not big trades. This is like $50,000 in premium between these two trades. I guess when you add up all the trades today, maybe about $150,000 in premium. But look at how far it is. So you have to ask yourself, do you think, I can't even get it on the screen, do you think Pepsi is going to go to 135 by April? Right? It's going to need a pretty big rally. I mean, I think that's a pretty low probability trade. I guess maybe what you do is you put an alert at the 52-week high if it breaks through. Then you can kind of keep in the back of your mind that there was some Pepsi call buying. But, this to me is not, I find that there's very limited information when people, they scrambled into these Pepsi calls. Well, yeah, it's way far. I can't even bring it. I could barely see it on my screen, how far they are going. Now, it could work. I'm just saying that the probability, you have to associate a probability with these trades. That's a low probability probability trade, but maybe they know something. For me, I put an alert right around 120, and that'll alert me. Again, that's only, it's only $1 away. This is $15 away in strike. So, I would rather wait for some confirmation that Pepsi's is going to try to break out versus buying, April 135 calls. I thought this was the best trade of the day. Also, some ETP calls as well, and more FCX calls that went up today again, as FCX continues to break out. I am long that name. Dow DuPont. This is something that I was looking at last week because, it did not have a good close to it, and it also really is having some trouble breaking out. But a call buyer kind of got me into the trade today. I had set an alert on Friday. It did hit, and then it kind of got faded. So we'll see what it does. I think the 50-day moving average will be my stop in Dow DuPont. This is a name that's been consolidating for a bit since this merger went through between Dow and DuPont. So they've had good earnings. They just haven't done anything. They do report. This is the one thing that's a little bit sketchy is. On Bloomberg, it says one date, and on Thinkorswim or Trade Alert, it says another date. So we'll see. I would think that most time institutional traders go off of Bloomberg, what date they see. But if you kind of see this DWDP, if you look at the date that they did these, January 26th, when did they report? January 25th. Now, again, I think Thinkorswim says February. But it seems like 26th is the 26th or the 25th is the day that they normally report. So maybe it changes because they're now two companies. I'm not sure, but in the past, it looks like the schedule is around the 26th. All right, so that's today's recap. I think for the most part, just have an open mind. There was an NVIDIA call buyer. There was a Lam Research, which is another semi name. Looks like some calls were bought versus put for sale. These charts, I think NVIDIA is a little bit of chop, but I think it has a little bit of promise to it. But, don't turn a blind eye to names that you haven't traded in a while and some things that have momentum. Some of these tech names, I think, are just going to be stuck in the mud for a little while. just have an open mind to trading some different sectors. You could trade whatever you want. Just don't get bogged down in some names that don't have any momentum to them right now. Last name I will mention is which I forgot, is EXP. Speaking of material names, this is Eagle Materials. Nice looking chart. A move out to 116 and a move all the way back to about 109 and found some nice support. Nice looking candle for the day. I did not take this trade because it's too short dated, unfortunately. I would be looking for something at this point going further out. It looks like they traded about 1,000 of those Jan 115 calls. They could work. There's just very high theta decay with those types of positions. So I may look at that position tomorrow. Just didn't want to add any more risk right at the end of the day, especially in such low volume. All right, guys, have a great night. Thanks for watching the video, and see you tomorrow.